Good evening, and welcome to the special presentation for Friday, June 11th, 2021. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's going to be my pleasure to give you a presentation this evening. Here at VectorVest, we have indicators only found in the VectorVest system to help you make better stock decisions. Insight that's faster and smarter than anything out there. So, we're going to start with a couple of indicators that have been discussed over the last couple of weeks. Now, we had Todd Schaefer talk about VST and the power of VST. And the VST indicator is the master indicator that we use for ranking every stock in the VectorVest database. Keep in mind, we track over 8,700 stocks. Those stocks are not just sorted willy-nilly. The master indicator VST shows you which stocks have the best combination of value, safety, and timing all the way down the database. We do the work for you. The next indicator, YSG. Last week, Jim Penna did a great job talking about our dividend master indicator. It is an indicator which combines dividend yield, dividend safety, and dividend growth into a single value and allows direct competition for all dividend-paying stocks in the database. So we all know that many stocks pay dividends, which ones are the best, and this indicator YSG will put that information right at your fingertips. The indicator that we're going to talk about tonight is called CI, or Comfort Index. This is an indicator which reflects the stock's ability to resist severe and or lengthy price declines. Why is that important? The stocks that consistently go up in price, and when we look at CI, stocks tend to, high CI stocks tend to go up more than they go down. We call that price growth persistence. Stocks that just continually move higher. Well, what's better than that? You want to be in stocks that keep moving up because hopefully as you're in them, you're going to keep making money. So it is a very powerful indicator. And just like its name says, you can have comfort in investing in these types of stocks. All right, so let's go to the software. And from the home page of the software, we're going to go directly to the Viewers tab. Now, this presentation is primarily up there or up here today for the brand new subscriber to the software. As you open up the software, you're going to see that we track so many stocks. We do time to market. There's so many searches. There's so many things there. Today, we're going to take it back a little bit, take it back to the basics. And if you're brand new to the software, the easiest way to start looking at stocks is to go to the stock viewer. Now, this is an enormous spreadsheet of the over 8,700 stocks that we found, that we have here, right? And you can sort by any of these indicators. This spreadsheet shows that out of 8,747 stocks, how these stocks rank up. All right, by our master indicator VST, the stocks that have the best combination of relative value, relative safety, and relative timing will rise to the top of the list. Now, Todd already talked to you about what these indicators are. Relative value looks at the stock's long-term price appreciation potential as compared to a AAA corporate bond. It's ranked on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Relative value will tell me if a stock's got the ability to outperform the market or a AAA corporate bond over the next 1 to 3 years. High relative value stocks are great for upside potential. Next indicator, relative safety. This is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. Now, that's always the backbone of a company's move, right? How do they compare to meeting or exceeding their earnings expectations quarter over quarter and year over year? So when we look at this, do these companies, high relative safety stocks, are companies that will tend to meet or exceed their earnings expectations, which will make it very attractive for more investors to buy. These two indicators, RV and RS, are our fundamental indicators. And when we analyze a stock, we're the only company out there that will base our analysis on fundamental analysis along with the insight of technical analysis. Relative timing is our technical indicator. Relative timing looks at the short-term price trend of a stock. Now, it looks at the direction, the dynamics, all included in that analysis. Relative timing, or RT, above the value of 1 means that the stock is currently in an uptrend. The higher above 1 it is, the faster it's moving faster it's moving higher. So we have that fundamental analysis along with the insight of the technical analysis to go and put into our VST, or value safety timing vector. It is a vector formula. So as we look at these, remember 8,747 stocks ranked by that master indicator. Well, what if I want to go rank by any one of these indicators? I can simply left click on that list or on that row. RV now, all of the stocks will now be ranked by relative value, the stocks that have the biggest upside potential. Now, these are long-term plays, and some of them are sell recommendations, but they have good upside potential. What's hurting Flugent right now? It's in a downtrend. Doesn't make it a bad stock. It just means that right now it's not moving higher, but the fundamentals are good. Well, let's go look at the safest stocks in the database. We'll sort by relative safety. And these are the stocks that are going to now be the less riskier stocks, a lot less sell recommendations up in here. And a lot of times when you have a high relative safety stock and it's got a sell recommendation, something's going on in the background. You got to do a little bit more analysis. But now these are the safest companies in the database that you can take advantage of. Facebook is in here, Google, a lot of stocks that you do know about in here, Lennar. You know that building is a big move. Monster Beverage, Logitech, BlackRock, safe stocks. All right, I'm going to go back to the VST. So now, as I mentioned today, we're going to talk about CI. Now, many of you, your CI will be all the way over to the end of the screen. You can slide it over. Let me show you something. If you want to slide an indicator, you can simply left click on it, hold it down, and move it anywhere you want it to go. All right, you can do that, or you can always right-click on the stock, go down to Layout, and from the layout, you can choose what indicator you want to move. Let's say, there again, market cap, and you know these buttons now come to life. I can hit the up or down button or move it away and out of the list as well. So there's a couple of ways of moving that CI if it's not already over where I have it. All right, so just a little tidbit of navigation there. All right, so I'm going to stick with the top VST stocks, but let's now look at the power of CI. CI, again, is the comfort index, the stock's ability to withstand long or lengthy price declines individually on a stock. Not on the market, but on a stock. That these stocks with high CIs are stocks that have the ability to withstand long or lengthy price declines, or to put it into better terms, these are stocks that have good price growth persistence, or they go up more than they go down. Now, I'm looking at this listing of the top VST stocks. I have 1-800-Flowers here. Notice that the comfort index, even though it's above the value of 1, but not really way above the value of 1, I can tell you by just looking at CI that the stock may be a good stock, but when I'm looking at price growth persistence, this may be a little bit more of a volatile stock. Remember, high CI stocks are high growth persistent stocks. So let me break it down. Let me right click on it. Let's go view the stock graph. Here's the stock graph. I'm looking at a 1-year graph, and I'm looking at a VectorVest simple layout where we're looking at the stop price, because a lot of people always ask, Glenn, when should you get out of a stock? Well, every stock in our database has a stop price, and every time the stock's price goes below the stop price, the stock automatically gets to be a sell recommendation. Many of you will say, well, that stop price is way too much for me to give back. That's fine. Use whatever stops are good for you, but on the VectorVest simple layout, we can see exactly when it's a good time to get out of the stock. Down below, we have RT, which tells us when the stock's in an uptrend or in a downtrend, and this is very important, looking at stocks that have good earnings per share rising higher. So even though earnings per share is rising, a lot more volatile in the stock, and guess what? Without even looking at the graph, I knew that it would look a little bit like this because of the CI value. All right, I'm going to close out of this graph, and let's go take a look at a graph that's got a much higher CI. Let's go down the list. How about ASO, Academy Sports and Outdoor? This is a hot industry, folks. CI at 1.94. Now, what do you think you're going to see on this graph? Let's go. Wow, that's the power of comfort index. Price growth persistence. High CI stocks will tend to look like this. And notice that with that stop that's there, which is a 13-week moving average adjusted for the fundamentals, that stop price The stock's price has never gone below the stop price. The stock has only been a buy or a hold for the whole year. Look at the earnings per share. Look at the RT starting to rise. That's what high CI stocks look like. All right, let's go down the list. Let's go find us another one. Let's go find this. That was at 1.94. Let's go to Crocs, which is at 1.91. Keep in mind, CI is on that scaling between 0 and 2 as well. Let's view the stock graph. Wow. 1 year graph, stair-step effect on earnings per share, jumping on RT, but still stayed above 1 for the majority of the time, a buy or a hold the whole time. Now, I'm going to take you through something else. It's not by happen chance that these stocks have high CIs. Why? Let's go to ASO. Let's scroll over. What industry is that in? Retail department stores. Well, as prices rise, because we've got higher inflation right now, prices are rising. Retail stores are selling stuff. Their sales are growing, and because they're charging more money and people are buying stuff, right? Crocs, also in the apparel. This is retail, this is apparel. Still, both of them are in hot industries. So I said to myself, wow, what a combination. High CI stocks are reflected. Let's go to Zim. How about 1.96? Let's go view that stock graph. Man, look at that. All of these stocks, and look at their earnings per share. So there's a direct correlation here that not only these stocks have high CIs, if you go look at that industry, another hot industry, transportation ship. As the country and the global economy starts to open back up, goods need to be shipped. Transportation ship is a hot industry. So not only do these stocks have good high CIs, they're also in good industries. I wanted to take a combination of a couple of things and talk to you about a search. I'm going to go to the Unisearch tool. From the Unisearch tool, I'm going to go to a folder called Bear Market Beaters. These strategies focus on making money in long positions, even during bear markets. Interesting. So these are stocks that hold their own. Part of why they hold their own is because a lot of these are looking at stocks that persistently grow. I'm going to go to a specific search called Stalwarts. This strategy will find stocks where in the hottest industries. All right. Best price growth persistence. Where did you just hear that? That's about CI, right? And with the best price growth persistence right there on both. So now, this incorporates a combination of another indicator. Remember when Todd talked about VST, he talked about RT, the short-term price trend of a stock. Well, if I want to see stocks that persistently go up in price, let's tie that in with stocks that are also moving up in price nicely with RTs above 1. But there's a caveat here. We're looking at industries, the top 10 industries in the database sorted by RT times CI. Wow. Mind blown in what you have available as far as flexibility in the software. Industry group not equal to ETF shorts. We want price greater than $1, average volume to be greater than 100,000 shares. And another thing, the stocks that are returned will be returned by not upside potential, but short-term price trend along with comfort index. Now, if I run this as of today, which is 6/11, as I run this as of today, and I'm looking at the top 30 stocks, look, ASO there, Lovesac, Dillard's, also in the retail space, going down the list, man, these are good stocks that have a good combination of RT times CI and in industries, the top 10 industries by RT times CI as well. You can't go wrong. So I wanted to put this to a little bit of a test. I'll go to the market timing graph, change from a stock graph to a market timing graph, and I'm going to use this timing signal, the DEW timing signal. All right, when was the last DEW up call? Should have been 526. There it is. I wanted to see that over the last, not even a month's worth of time, how well this search is done. All right, so 526, last DEW up call. Let's go back to the Unisearch tool. Let's go back to 526. And here we go, 526 up call on the confirmed call as well. I'm going to run the search. I'm looking at the top 30 stocks. How about ASO was still in there? Even then, Nucor for steel. Steel we know is rocking and rolling. Retail for Aaron's, that kind of thing. Let's quick test the top 10 stocks. Less than a month. 7 winners, 3 losers. 1 loser is against me 18%. There's no way in the world you should let a stock go against you that much. Make sure that the stops that you use, whether it's our stop in the software or whatever stops you use, make sure that the stops are good for how you invest in the market. But how about Dillard's, 29%. ASO, the stock that I told you in retail, up 15%, outpacing the market, up almost 4.5% compared to the VectorVest composite, up almost 2%. And folks, this is in less than a month. That's a great combination. And you know something? I'm going to leave it there because I want to keep this as a simplistic video. Run the search. Let's stream it. Let's run it as of today. All right. And what you would do is you would cherry pick. Now, a lot of people will say, well, Glenn, these stocks, I'm going to view the stock graph. These stocks have already gone up. Why do I want to buy them now? And I'm going to answer that question in 2 ways. 1, the stock is doing exactly what you want it to do, which is go up in price. 2, you saw that indicator that we put as part of the search that you're always looking at the top 10 industries sorted by RT times CI. So no matter what the market is doing, you're always looking at the top industries. Let's go down the list some more. There's Lovesac. There's Dillard's. Look at all of these stocks and don't be afraid. Now, if you look at a stock and you say, well, that earnings per share doesn't look so good, cherry pick only the ones that you want. That's all right. Cherry pick only the ones that you want, but these are stocks that are rocking and rolling, ripping and running, the whole 9 yards, however you want to look at it. And the high CI stocks, again, high growth persistence, and cherry pick. Only take the ones that you really, really, really like, all right? And I think that that's a really good, simple technique of investing in the market, especially if you're brand new. If you've been with us for a while, then you know something, going back to the fundamentals is a good way to shore up your searches or shore up your way of getting in and out of the market, your trading plan. So with that, folks, it's been my pleasure to bring your presentation this week. For those new people, hopefully we've given you some insight on how to take baby steps to start finding stocks. For those of you who have been with us for a while, hopefully, again, that this was a refresher, and maybe you incorporate some of this into your current trading plan to make sure it's even more stout. So until the next time, folks, we see you. Have a great day. Any questions, please give our product support staff a call. Till next time, see ya.